What's going on, guys? My name is Nicholas Merten here at Data Dash, and today is March 7th of 2018. Well, folks, today we have a really big privilege. It's definitely gotten me a little bit giddy here because for years I've looked up to the individual we're interviewing today. Today I have the opportunity to talk to Peter Schiff. He's a well-known figure not only in the commodity space, but in regards to economics for currencies as well as precious metals. He's not only written a few New York Times bestsellers, from my knowledge, but along with that as well, he's gone out and run a pretty successful podcast on his own channel and built a wonderful following. He's also very well known for calling the prediction of the housing crisis as well as the credit bubble back in the mid 2000s towards 2008. So he is a figure not only I envy, but many people out there in the community for the kind of speculative community of precious metals and crypto admire as well. So Peter, thank you very much for coming on the channel and having this discussion.
Oh, thanks for inviting me on.
Yeah. So we got a lot of different things Peter and I have kind of agreed to talk about today. A lot of people have definitely wondered about having a little bit about of a debate in regards to the whole Bitcoin versus gold argument. It gets tossed up a lot. But hopefully as well, we can spend some time talking about U.S. markets. A lot of people have been asking about the stock market and the recent dip we had and talking about the fundamentals behind it, as well as possibly maybe the housing market and a little bit of talk on precious metals. So seeing as both Peter and I have a kind of focus on markets, we'll definitely spend some time on that. But I guess we'll go ahead and get a little bit started with yourself, Peter. You've built a wonderful audience and everything over the years. I'd love for you to definitely share it with some of the crypto community who might not know you. But yeah, go ahead and just talk a little bit about yourself.
Well, I have been in the financial services business most of my life. I think out of college, really, that was my first job working in commodities, precious metals. Ultimately, I went into becoming a stockbroker and then having my own firm. And, I remembered early on, one of the hard parts about being a stockbroker was finding clients. I used to cold call. I used to make maybe 1,000 dials a day, if you could believe it. I would dial with both hands, and I have like a dialer helping me, and I would just call people randomly and try to get them to listen to some ideas that I had about the stock market. And when I opened up my own firm, I decided that rather than trying to find the clients, I wanted the clients to find me, right? I wanted people to be looking for me. Or at least, giving me contact information so that I can call people that were, predisposed to think the way I think and maybe be receptive to some of the ideas that I had. So I wanted to fish in a barrel rather than just cast my line, blindly into an ocean, hoping to catch something. So, I initially started to put myself out there, reaching out to newsletter writers, with which I had some agreement. Trying to write stuff that was on the internet, and trying to, put out my perspective on the economy, on economics, on investments in a way that people would read about things and they would find me, and then it would make it easier for me to find them, right? Because they were coming to me rather than me just trying to find them. And I realized that my view is a minority view. I mean, people would say I'm on the fringe, but I need a clientele that is also going to be on the fringe with me. But in doing that, I kind of made a name for myself because now I'm out there, I'm writing stuff, I'm going on television, I'm going on the radio, and a lot of people started following me. I mean, I initially was trying to appeal to potential investors, but I think I ended up creating an even greater appeal with younger people who, don't really necessarily have a lot of money to invest, and so they don't need me to manage their money, but they enjoy listening to me. And I get a lot of personal satisfaction out of knowing that I'm making a difference. I still get a lot of emails almost daily from people all around the world. I mean, this is not just the United States, but all over the world who have, seen the Occupy Wall Street videos and who tell me that, I was a Marxist, a socialist, and I watched this video and now I'm a free market capitalist. I'm a libertarian. And it wasn't necessarily just that video that convinced them, but the video was the catalyst to actually wake up and do some more research and actually broaden, their horizons and understand the world instead of just reacting emotionally, which is what anybody who would be a socialist would do. I mean, they're ruled by their emotions and their compassion, but they're not using their brain. They're not reasoning things out. But when I open that door and I get people to think, that's the most important thing, because that's the most dangerous thing to a liberal is somebody who thinks, right? Because that whole philosophy will go away, almost like a cross to a vampire. if you introduce logic, right, to a liberal or a socialist, then you can kill it as long as they're open-minded to the logic. If they're completely closed-minded, then it's almost impossible to get through. But some people, young people, they still are willing to open their minds, and so I've been able to do that. And so it's gratifying that my interest in really growing my investment businesses has gone way beyond that. And I know a lot of the people who listen to my podcast, the vast majority are not clients of mine. A lot of my clients listen regularly, and that's great. But there are a lot of people who listen who are not clients.
Yeah. Well, you've definitely built a brand for yourself, Peter, because like I said, I have watched you growing up myself. The thing I really love about that, what you just said, is in regards to the Occupy Wall Street video. I remember watching it, and you saw a lot of justified anger, I think. It's understandable that after '08, people were upset and looking for answers. But the thing is, you find so many people, and I think this is just sadly the case in regards to the manipulation of media, as well as people just looking for simple answers and straw mans, that so many people were just on the idea of higher taxes, excessive regulation. But at the same times, what we don't realize is that the answers are usually a little bit deeper, and people don't spend the time to learn about the Federal Reserve monetary policy. So,
it's very easy to blame capitalism, the banks, the rich, right? I mean, they're easy villains or scapegoats. And so the politicians obviously, pick up on this, and it serves their purpose to have a villain that they can save everybody from, right? That's why you need me. That's why you need government to protect you from all these evil, greedy people that are out to exploit you. When in reality, the only thing we need government from is to protect our rights. These businesses are not going to harm us. It's legitimate criminals that might harm us. And unfortunately, right now, it's the government that is acting as the criminal. And almost all the harm that is being inflicted on the economy and individuals is coming from government.
Mm-hmm. Yeah, no, I can agree with that. I definitely think we've got definitely issues in regards to the financial sector, but most of that has come due to government bureaucracy and controls of central banks around the world due to failed monetary policy. So it always has to do.
And it's also the regulation. I mean, the banks are highly regulated and controlled by government. And so whenever you have this partnership between government and business, whenever it goes wrong, which is pretty much all the time, it's always the business that gets the blame rather than the government. And, there's a name for this when you have government basically, infiltrating business and controlling business through taxation and regulation. And it's called fascism. And that's what it is. And that's what we have. And so many people throw that term around without actually understanding what it means. Mm-hmm. A lot of people think, well, that's the extreme right. It's not. I mean, fascism is a form of socialism, just like communism. Communism and fascism are both forms of socialism. They're just different forms of it. But it is a socialistic system, and it's unfortunately what we have.
Mm-hmm. Yeah, no, I think you're right on that. I think people over the next few years, as we step into the ending of the credit cycle and we start to see the reversal of, I think, the value of the dollar, but also the increase and rise of value of cryptocurrencies, of precious metals, and all these other different types of kind of markets where I think you'll see not only retail investors start to look towards, but also institutions to save what little wealth they have or what little paper wealth they have. I think people are going to start to realize what it means in the sense of ownership of real money, owning your own money, and then also understanding what real free markets look like. So yeah, nonetheless, I think that's an awesome viewpoint, Peter. But kind of going into that topic in regards to stepping away from these traditional systems of totalitarian control, a lot of people do generally look towards the debate that I guess we've kind of decided to discuss today in regards to Bitcoin and gold and everything. And these kind of alternative sources of money and store of wealth, I guess people could have different opinions on both Bitcoin and gold being that. But I'd love to kind of get your take on what you like about Bitcoin, but also what criticisms you see of it, just so we can get it out there and stuff. And then I can share my opinion. We'll bounce back and forth a little bit on it.
Yeah, I mean, the idea of it, the sentiment behind it, I mean, I can certainly appreciate that. I mean, just like when I went to Occupy Wall Street, and I understood that people were mad. I just said that, your anger is directed in the wrong place. It should be at government, not the free market or the private sector. And I think the sentiment surrounding Bitcoin, yes, I mean, I agree with that the fiat system that we have now is flawed, that it is going to fail, and that ultimately something is going to replace it. I just don't believe it's going to be cryptocurrencies. Certainly not irredeemable cryptocurrencies. As far as I'm concerned, you could call them fiat cryptocurrencies as opposed to fiat national currencies. But I do not believe that any of the cryptocurrencies, whether Bitcoin or any one of a number that have come out that are probably better than Bitcoin to the extent that you could be better, maybe they're faster, they're easier to use. But regardless, even the best one, I still don't think is going to survive because I don't think that they are going to be able to function as money. I don't think they're going to be a reliable store of value. And because they're not a store of value, they're not going to be a unit of deferred payment. They're not going to be, you're not going to be able to really transact in them and borrow in them and have long-term contracts in them like you can, with money. I see them as just a speculative asset where, people are betting on something that is never going to happen. I mean, people just like, a lot of people bought .com stocks that they thought were eventually going to produce a lot of profits. And so there was a hot story there and people were attracted to the potential. But at the end of the day, they were never able to realize that potential and the companies went to zero. But that didn't stop people from, on paper making a lot of money before the bottom dropped out. And, some people cashed out and some people didn't. And, they lost whatever paper profits they had. Some people, of course, got in at the top and just, took a huge bath as the bubble deflated. And, that's what I expect to happen with the cryptocurrency space. It's just not going to work. And I hate to be the bearer of bad news, although most people just dismiss what I have to say. I'm an old guy. I just don't get it. I'm stuck in the horse and buggy days, and I don't want to ride a horseless carriage. And I don't see it like that at all. I mean, believe me. I mean, I think I would adopt any new technology. I mean, I think would be on the forefront of that. I just don't get it. I don't think it's going to work. And people say, well, you just don't understand it. I think I do understand it. I think the reason that so many people are involved in it is because they don't understand it. Now, a lot of those people have made quite a bit of money by not understanding it because they bought it a long time ago and greater fools paid even higher prices. And people can confuse that success with understanding, thinking that, oh, I didn't buy Bitcoin and so, I'm wrong. I mean, what I was wrong about was not identifying the enormity of the potential of a bubble, how big this thing could have got. This was probably one of the biggest, if not the biggest, speculative bubbles we've ever seen. I mean, even you go back to the Dutch tulip craze. I know
it went past the tulip craze this year.
But this could be the biggest bubble ever, and I didn't make any money off of it, right? I mean, clearly, I could have bought these things years and years ago and sold them and made a lot of money. But I think the bigger story is going to be the money that's lost. I mean, there's going to be so many people that are going to lose a tremendous amount of money in these cryptocurrencies. Now, there's a pretty good chance that we've seen the peak in the bubble already, right? We got up near 20,000. As we're recording this, we're back below 10,000 again. I think we got down to maybe 6,000 or so was the initial sell-off low. I think we just recovered to around 12,000-ish, so we almost doubled. Now we're back down below 10,000. But look, there's a good chance we've seen the highs. I mean, maybe we haven't. Maybe there's another rally coming, but I wouldn't want to bet on it. I mean, I think there's tremendous downside risk in this space, and I think people are going to learn this lesson the hard way.
Yeah. No, that's a lot of good points to take in and everything. First off, I will agree with you on some things. The use case of crypto as a payment solution right now, especially if you want to take a look at Bitcoin, there is some common criticisms that are still available. First off, it's still a volatile currency. Now, my personal opinion as to why it is still volatile is we have to think about the size of the value of Bitcoin and how many people have adopted it. So we have less than 1% global adoption of Bitcoin, or at least ownership of Bitcoin. You're also dealing with, if you're just looking at Bitcoin, you're dealing with a currency that's, it depends on the value, around $150 billion in value. And then total currency markets for cryptocurrencies are only valued around $450 billion. So if we compare that to traditional fiat markets that are, if we value it in US dollars, $84 trillion, we obviously have a much more volatile, small scale, high risk market. So I think that's why it's volatile. And for the temporary time being, payment systems like BitPay, and ways that we can convert back to fiat currency for the short term for commerce, commerce companies and everything like that. I think it's a good short-term solution. In the future, though, in the sense of high fees, for example, or slower confirmation times, we are seeing innovation in the space. And I think the analogy used to the dot-com bubble was very good, talking about how there was a lot of people speculating on the internet. And everyone, I think, generally knew the internet was going to be something big, just like for the railway bubble and the other historical bubbles that we usually have with innovative technology. But it takes a good 5 to 10 years to formulate the infrastructure, to get it adopted, to get it understood, and really see where we can take this. So I think the use case will increase over time. We'll have systems, for example, we're seeing currencies now that can scale much further than the transactions per second that Bitcoin can do, that still have the same immutability, the same censorship resistance, as well as minimal to no fees and high confirmation times, instantaneous confirmation times within 2 to 3 seconds. So
and even if you accept for a minute that these newer currencies that are more efficient and that are faster and that can do a better job than Bitcoin, if you accept that, I have a hard time seeing why Bitcoin would have any value at all. I mean, what's the purpose of Bitcoin if there's another cryptocurrency that I can use that's better, faster, cheaper, more efficient? I mean, so I just don't see how Bitcoin would have any value whatsoever if another coin was better. But then the risk is, okay, there's another coin that's better. Well, what if somebody comes up with one that's even better than that? Then what is the purpose of that coin? I mean, it just doesn't, you would think that the fact that anyone can come up with a better, faster, quicker version of something that intrinsically has no value, the minute you have something that's better than the one that you used to use has no value. I mean, people are trying to say, well, Bitcoin is going to have value anyway. No one's going to use it as currency, but they're just going to hoard it as if it's gold. To try to make that assumption makes no sense to me. And also you mentioned something about how it's very volatile now, but in the future, when more people are using it and maybe the price is higher, the volatility will go away. And, I just don't see how. That's just pure speculation. I mean, the volatility has not gone away. Bitcoin's gone from 10 cents, to a couple of bucks, to $1,000, to 20,000. And during that period of time, the volatility has stayed there. And you're not seeing it used anymore really in commerce today than it was 5 years ago. All this is betting on the come, that somehow, if this happens, then this volatility will go away. To me, I see no reason to believe it will ever become less volatile. In fact, I think one of the reasons that it isn't even more volatile is because you still have so many early adopters that are hoarding so many of their Bitcoins because so many people believe the price is going to keep rising. I think to the extent that those people decided they wanted to sell, and maybe that would happen if the price was much higher. I think if you started to see a lot of the long-term holders trying to cash in, the volatility would spike because I think the market could implode.
Yeah, so there's a few things. In regards to the use cases for Bitcoin, I think we're really seeing two of them right now. And I hate to say it, it's leaning a lot further away from the peer-to-peer digital cash aspect, which is what was originally written in the white paper. But I think what Bitcoin is serving more than anything as is what people have been obviously labeling it in regards to investment funds and retail investors, and that's digital gold. The reason why I think it's being kind of marked as this is because what I think Bitcoin's serving as is a pool of liquidity, an entry point for this market. So whereas it used to be peer-to-peer digital cash transaction fees are relatively low, we're seeing now that base blockchain technology, unless you want to increase the block size that's added to the chain every 10 minutes to be hundreds of megabytes, if not gigabytes, to meet kind of Visa, MasterCard levels, which we could do, but it's going to lead towards more centralization of Bitcoin. If we can't see base blockchain technology scale, we're going to need something else. But Bitcoin is always that first entry point of liquidity. So when new capital comes in, and I think you're going to see it from investment funds and a lot of people who have stakes in currency markets, moving it over into cryptocurrencies, and it's going to serve as the investment point into all this new ecosystem of currencies.
But if you're saying that Bitcoin is just some kind of gateway to get the currencies you actually need, right? It seems to me like it's some kind of useless middleman that would eventually be done away with. I mean, so if I want to buy something like EOS, okay, well, you got to buy Bitcoin first, and then you got to sell it and buy the EOS. That seems like a lot of transactions, a lot of expense. I mean, there's got to be a way to just go directly to the currency that I want, rather than just have to buy some currency as a stepping stone to something else. I mean, so if you're saying that's the only use of Bitcoin, to me, it doesn't seem like that function is going to be around for forever.
Not forever, no. And eventually, I think they're talking, for example, on Bittrex, one of the new exchanges, they're going to have fiat gateways, so you can buy EOS, or I don't know about EOS specifically, but you can buy other cryptocurrencies directly with cash. I think the issue is it's that's pretty much going to be the trend where we see people treating this as an investment rather than a currency, because as of now, there is not mainstream adoption to where I can work at a company and get paid in cryptocurrencies unless I do freelance work. So I think that's the
But the
trend.
problem is, though,
Yeah.
if you don't believe it's going to be a currency, if you don't believe it's going to succeed
In the short
as a
term.
currency, and I don't, then there's no investment thesis in the short run. There's nothing to invest in. If it's not going to work, right, then what gives it any value? I mean, why would you hold on to something once you admit it's not going to do what you thought it was going to do, to then try to invent a reason to justify holding on to it anyway? Well, yes, it's not going to be currency, it's not going to be money, but it's just going to be some store of value like gold. You have to understand why gold has been a store of value for thousands of years, because Bitcoin is nothing like gold. Despite the fact that you have all this terminology that was deliberately, used to make it sound like gold, right? You mine Bitcoins, right? There's no mine, there's no pitchforks, there's nobody out there with, there's no mine, right? But you create them. But they said it's mining, and there's miners to make it sound like, your gold. They make the Bitcoin look like gold. I mean, its color of gold looks like a coin, and it's made of gold. I mean, that's done for a reason, to create the false impression that you're buying something like gold, right? You're getting digital gold. And then they talk about, well, it's immutable and it's scarce and it's divisible, and all that is true. And gold has those properties, which is why gold is money and not hogs, or not, not wheat or, or cattle, or, other commodities, right, are not, could be used as money, but they don't function as money because they don't have those other properties. But the reason gold became money in the first place is because everybody wanted gold, because of what gold is, because of the tangible physical properties of that rare element, all the things that you can do with the metal, right? It is a luxury good that wealthy people have desired, for time immemorial. I mean, and it does things that no other metal can do. It has properties that no other metal has that makes it so unique, and it happens to be rare. And so it has been functioning as money for not just centuries, but for thousands of years. And so in that perspective, Bitcoin nor any other digital currency is anything like gold, right? It is the ultimate in fool's gold. It is supposed to con you into thinking that what you have is gold, which is what fool's gold is all about. But you don't have anything. You've got nothing. You've got digital nothing. You don't have digital gold. I mean, and one of the things that people would say early on, when they were criticizing me about, gold doesn't work, was that, hey, you can't use your gold to buy a cup of coffee. But look, I can buy a cup of coffee with Bitcoin, which, actually you can't even do
No, it's gold
because
money.
of the cost. But, you can buy coffee with gold, actually, because, if you use the technology of the internet, or even if they had a cryptocurrency, and I think they have some cryptocurrencies that are backed by gold, but you don't even need a cryptocurrency. I mean, you can have a company like Gold Money, which you asked me about, where you can buy your gold and have it stored, by Brinks through Gold Money. And now you can have that gold in an account that you can actually use to buy a cup of coffee. You can use it by using a free debit card that comes with your Gold Money account, and you can just give it to the barista to pay for your coffee and use the gold in your Gold Money account to fund the transaction. Or down the line, the gold company may be, be willing to accept, grams of gold directly in exchange for his coffee, in which case you can move some grams of gold from your account to the coffee merchant's account, and you can buy your cup of coffee in gold, or you could sell your cup of coffee and be paid in gold. So all that can happen. You don't need cryptocurrencies to get away from dollars or euros or yen. We have the technology to do that without having to rely on a worthless cryptocurrency.
Yeah, well, there's two things I just want to bring up that it would differ gold using, for example, gold money versus Bitcoin for a transaction. You're very right. I'm interested actually to talk a little bit more about gold money later on. But the two things that are key differences from something like gold money is the immutability you mentioned before, or the sense of censorship resistance. So, for example, if you and I want to make a Bitcoin transaction, there is no question about it. We can make that transaction together. In the case of gold money, now I'm not discrediting the company at all. But in this sense of gold money, if a government wants to stop transactions from happening between an intermediary like gold money, between our peer-to-peer transaction, there could be potential threats to that in some sense because they're managing the gold. The other thing as well that I wanted to mention in regards to gold money is that we have a third party we're trusting in that sense. So, for example, one example I always bring up, and I bet people have probably brought it up, and I'm not going to use it as a misleading statement, but you've probably heard about eGold before, the company back in the 1990s that,
Yeah, exactly.
yeah. Now, to be fair, for those of you who don't know about eGold, it was a company that allowed people back in the 90s, kind of during the dot-com craze, where you could actually own, kind of like how in gold money, have your funds in store of gold's wealth. However, the only thing you could do is exchange gold wealth between one another, between different gold money accounts. Or sorry, not gold money, sorry, eGold accounts. Now, the difference with gold money, which Peter Schiff is talking about, is that you can actually swipe it, and what they'll do is they'll convert it to shop it anywhere, just like how, for example, you can make a standard debit card transaction. The issue still here, though, is what I'm referring to in regards to eGold. Now, I trust gold money because you're a part of it, Peter. I know many people out there probably use it on a day-to-day basis, and it works fine. The difference between that and Bitcoin is that when you have ownership of Bitcoin in your wallet, when it's not an exchange, when it's in your wallet making peer-to-peer transactions, you own your money. I think that's the big difference between something like Bitcoin and other cryptocurrencies.
Yeah, and I see that.
Yeah.
I see that appeal, but part of the problem is you say that there's nothing the government can do to stop me from transacting in Bitcoin, right? Well, yes, they can. They can prohibit it. They can make it illegal. They can pass a law that this is money laundering. This is contraband. They can say the punishment if you're caught transacting in Bitcoin is 20 years in jail. Now, do I want to risk going to jail for 20 years to make the transaction? I mean, there are a lot of things that I do right now that I don't believe that I'm constitutionally required to do, but I do it anyway because the government has a lot of power over me, even though it's usurped that power. I acknowledge that, and I'm trying to go the path of least resistance, and I don't want to subject myself to imprisonment or fines. And so in many cases, I do what the government tells me to do. And if the government told me, hey, you're going to go to jail for a long time if we catch you with a cryptocurrency, I wouldn't want to take the risk. Now, maybe there are some people who don't care. But I know that anything that's on the internet, anytime I'm transacting, I got to be leaving some kind of digital fingerprint and something that's going to come back and get me. So I do think that there is going to be some risk there of the government coming down. But I know that people say, well, if you're going to use a company like Gold Money, that you have a third party. You have to trust this counterparty, which people have been trusting counterparties for hundreds of years or thousands of years. I mean, the earliest currencies were issued by private banks, not governments, and they were totally fine. And those currencies were backed by the gold that those banks held in their vaults. And so you always had to trust the bank. But the bank, wanted a reputation. I mean, there were free market forces that kept the banks honest. And so there's a lot of free market forces that are going to keep Gold Money honest, that are going to keep Brinks honest. I mean, Brinks has been storing gold for 150 years. They never lost an ounce. I mean, they have a reputation to protect. One of the things that's different between maybe Gold Money and eGold is what got eGold was the money laundering. I mean, it immediately attracted the illicit type of transactions, and Gold Money does everything it can to prevent this from happening. I mean, they totally police all their accounts, AML compliant, know your customer.
Yeah.
So if you have a Gold Money account, you're not a money launderer, you're not a drug dealer, you're not a terrorist. They can prove that they've done all their due diligence, and so the government's going to leave them alone, right? And so there's every reason to believe that your gold that you've entrusted to them is going to be safe. Yeah. The problem with Bitcoin, apart from the fact that I said the government's going to outlaw it, what I'm putting my trust in is not a third party. I'm putting my trust in the future value of Bitcoin, which is totally based on confidence, based on people's perception that it has some value. When I don't have to put my trust in gold, because gold speaks for itself. Gold's value is intrinsic to the metal.
No matter of inflation.
I have thousands of years behind me of people wanting and desiring gold, and I know what gold is used for, right? And in fact, even Gold Money, they just launched a company called Monet, which I would encourage anybody to check out their website at Monet.com. But we sell through Monet jewelry made out of 24 karat gold. So, you can buy a gold jewelry and you're actually buying gold. And if you decide you want to sell it, you're only paying about a 20% premium over the price of gold, the melt value. So let's say your gold necklace has $1,000 worth of gold in it. You might pay $1,200 for it. So you're really paying $200 for the jewelry and you're getting $1,000 worth of gold. Whereas if you went to Saks Fifth Avenue or Neiman Marcus and spent $1,200 on a gold chain, you'd be lucky if you had $200 worth of gold there. So you need gold price to go up 5 times. But the point is that gold has actual value, and I would rather trust have some gold with gold money, and all I have to do is trust that they're going to want to maintain their business reputation, versus just trying to put my wealth, store my wealth in something as subjective as Bitcoin that 10 years ago didn't even exist, and I have no way of knowing whether 10 years from now it will still exist. Okay. It can evaporate any minute. It's if people don't want it anymore, then it's gone. Okay. Right? I mean, if people all of a sudden people want to sell Bitcoin either because there's another cryptocurrency they like better, or they just don't want any cryptocurrencies, the market is going to implode. Yeah. And why would I want to take that risk? That's a much bigger risk.
No, you do bring up some good points, Peter. I think it's a very early market. It is going to be for the next 5 years. It's speculative right now. That's why people, I think, more than anything, are investing and trading in it. But in regards to it, I just go back, and you were talking about the whole trust system. This is kind of the last point on drilling, but you made a fair point. In the sense of convenience right now, it might still be a better system in regards to the volatility of Bitcoin to stay in something and give that sense of trust to something like gold money. Again, I don't doubt the company in any regard like that. But the whole thing about a completely trustless system like Bitcoin is that I don't have to worry about a run on the bank, for example, where I come there and I don't find it, or the old gold story where, for example, I was using the IOU notes and then I come in and realize they printed more IOUs than the gold. So I think that's just the biggest selling point, is the sense of no trust whatsoever. It's the first time in history we've really had something outside of pure ownership of gold.
My point, though, is that it's the ultimate trust, because you're putting your trust in nothing. You're putting your trust in the fact that this intrinsically worthless crypto token is going to maintain its value, and that other people are going to want it in the future. They want it today, but you're trusting that they're going to want it in the future. But why? I mean, I just think that's a huge leap of faith that I'm not willing to take.
That's
right?
Fine.
I mean, so that's trust. It's not that there's no trust there. And I know a lot of people too. They deposit their coins in these exchanges because they want to trade with them. They want to buy. They want to sell. And there you have a third party. And we've already seen lots of theft. And in fact, even if you have your own cryptocurrency, I mean, if you have it on your cell phone, I mean, if somebody knows that you got cryptocurrency, I make a point of letting people know I don't have any. There's no point in trying to hold me up. But if I was somebody that was out there talking about all the cryptocurrencies I had, I mean, somebody can put a gun to my head and just say, "Give me your crypto. Give me your."
Well, they could do it. They could do it with gold as well, but
no. I wouldn't be carrying my gold around. My gold was in a safe that they can't find.
Yeah. Well, fair point.
Because it's all my passcode, or I don't know. But so it's not this ultimate, trustless or thing that you can count on. There are so many risks related to these currencies.
No, you bring up some good points, Pierre. I'm glad we definitely got to dive through some of that. I think, again, we've kind of built the ground here. The thing is, right now, crypto is still a very speculative market. It's still very volatile right now, and I don't think it will get there, like I said, until it becomes a more mature market. Still could be volatile, but over time there has been, I was actually checking a volatility measure, and over time Bitcoin's volatility actually has reduced in the long term of trends. But again, though, there's different benefits. There's pros and cons to both sides and stuff. So I guess we definitely got a good.
We saw a 70% decline from 20,000 to under 6,000 in 6 weeks. I mean, that's a spectacular decline. I mean, just today alone, it's down 10% from yesterday. I mean, that is an enormous move just today, right? Just that you could have something that swings like that.
Yeah.
And it can go down, 70%. It can go down 90% or 95%. I mean, there's obviously no floor. Nobody knows, right? And the next time Bitcoin goes back down, let's say it goes back down to 5,000-6,000 in a few weeks. I mean, how do you know it's not going to keep falling to 1,000? And then if it falls to 1,000, how do you know it's not going to 100?
Mm-hmm. Yeah, I just say, in the sense of volatility, I just keep in mind. I mean, this, like you said, it's only something that's under 10 years of experience of being out there. So I think that's just the main thing. When it comes to volatility, we need it to be more established. In the sense of kind of like trading, for example, when you have the order book. So right now, for example, there might be $1 million worth of buy orders or $1 million worth of sell orders on an average order book on an exchange for Coinbase or something. in the future, if we get the new flow of capital into this market, if this becomes a multi-trillion-dollar market, you're going to have much more within the order book to where it's a little bit more difficult to have those type of volatile sell-offs or those boosts up to the upside that will eventually lead, as we've seen in the longer term, Bitcoin reducing. But it's still shaking.
Assumes that the capital keeps flowing in. I mean, when Bitcoin was going straight up, and they launched the futures contracts and it went 2,000, 5,000, 10,000, 15,000, 20,000. It was very exciting. It was all over the news. It was all anybody was talking about. And maybe at that point, it might have looked as if, hey, a lot of the big money was going to come in. But now that it's more than 50% from its highs, which would technically put it in a bear market, a lot of that froth has come off the top. A lot of the speculative fever may be at a back burner. So a lot of that money may not be coming. Yeah. And it's possible that some of the money that already got in may be looking to bail out. Yeah. So, you may never get that level of investment.
I think personally, this is just me, I think we will see ETFs this year. We'll have to see if that's enough to push it higher. I think it's just with the SEC's talks recently that this is being seen as a little bit more of a legitimate market that could see institutional vehicles being developed, such as ETFs, and we already seen the futures contracts. So I think we'll see that this year. But
one place they have value is as a trading vehicle. I mean, if you're a day trader, there's more action probably in the cryptos than in any other
market right now. Yeah.
Now you don't get the leverage, right? You can trade gold or soybeans, and use a lot of leverage, and the leverage is what gives you the momentum. Yep. But there, the price swings on a given day are a fraction of a percent. But Bitcoin, I mean, you get 5% swings pretty much every day. I mean, you get. So this is a trader's dream. I mean, there's so much volatility there. So there are people that are just making money buying and selling. And the question is, what happens when the music stops, right? Who gets left hold of the bag? Yeah. And I've said this in the meantime, if you're in cryptocurrencies, right? If you're in them, you need to trade, right? You can't just hold and hope. You can't be one of these guys who's holding forever and who doesn't want to take anything off the table. I've said this a lot of, many times. Don't be a pig here. I mean, that's an old adage. Bears make money, bulls make money, pigs get slaughtered. Don't get conned into the idea that I can't sell anything because I'm going to miss out on all the future profits. And, those fools that sold Bitcoin when it was only 1,000, right? Because now look what they missed out on. You can't think that way because eventually it could be worthless. And the guy that sold at 1,000 will end up looking pretty smart if you never sold anything and you go down with the ship. So always sell. You don't have to sell it all. Right? Don't be a pig. If Bitcoin is going to go to 1 million, you're still going to be rich, right? But if it goes to 0, you don't want to be poor. So, you sell into the profits. And then if you want to trade a little bit of it, buy, sell. So, you could, there's so much volatility there. You can hold on to some just in case I'm wrong and you're right.
And then the next thing to do,
don't sell them all,
and the next thing to do is to cash some out and go over to SCHIFFGOLD and buy some precious metals.
Well, absolutely. And in fact, at Gold Money too, they made it easy. You can trade Bitcoin and Ether at Gold Money, and so you can easily move from cryptocurrencies to real gold and silver and platinum and palladium, whatever you want. Or I think there's 9 different currencies that you can get involved in.
I noticed that. I thought that was a good thing that you guys at least do that, kind of getting the same kind of community people into the precious metal space. That's
and
good.
Look, there are trading profits. Look, if people want to gamble and they want to trade these things, look, it's probably better odds than just going to a casino in Las Vegas or Atlantic City and spinning a wheel, right? I mean, I can see. I mean, if you know what you're doing and you have some disciplined trading approaches, buy low, sell high. I mean, you can make money in these things, and maybe you could take some of your profits and hold them just in case, I'm wrong and Bitcoin really becomes the money of the future. But right now it's a speculative trading vehicle of the present. Yeah. And so there's some profits you can make there if you're nimble, but you can't leave it all on the table. You have to realize that you're gambling, and maybe you'll win. Maybe you've got the winning lottery ticket, but chances are you don't. Right. And, so you got to sell.
Yeah, you gotta diversify and do your research, guys. And also as well, Peter's very right on that in the sense of being flexible and stuff. As much as we talk about, I guess there's the whole joke of hodling or holding long term on your projects in crypto. Again, always be flexible. Again, like Peter said, these are speculative markets, so you're going to have things drastically changing. But Peter, I do have to segue from it because I know we're going to keep talking about Bitcoin and gold for a long time. However, I do want to spend some time because not only am I a big fan of you personally, and I've loved your take on markets over the past few years, but as someone in the crypto space, whereas most people do technical approaches or focus on things like mining, for example, I would say that my specialty comes from focusing on a market perspective, and I got my knowledge from traditional markets. So I want to talk to you a little bit about U.S. markets because some people in the community have been asking me to talk about the recent stock dip, talk about the fundamentals of monetary policy, current status of precious metals markets. So I thought we could go ahead and start off talking a little bit about, what do you think the current state of fundamentals are, talking about Fed monetary policy, some of the things that you're spotting, and then I'll dive in and toss in some things as well.
Yeah. Well, look, I mean, I think we have bubbles in pretty much all the assets. So I talk about a bubble in cryptocurrencies, and I believe that's true. But you have bubbles in the stock market, you have bubbles in the bond market, you have bubbles in the dollar, I believe, in the foreign exchange market. You have bubbles in collectibles, in other collectibles, and antique cars, in paintings, rare paintings. I mean, so where's all this coming from? I mean, why do we have all these bubbles today? And the reason is the central banks. I mean, it's the Fed, but it's also the ECB, it's the Bank of Japan. You have interest rates at zero, and in some places negative in nominal terms. In real terms, which is when you take inflation, out of the interest rate, almost every economy has negative real rates of interest, even if they have some nominal positive rate. And so it's these artificially low interest rates that have fueled all these bubbles. I mean, so it's not a coincidence that at a time that we have an unprecedented easy money policy, we have unprecedented bubble blowing and bubbles, and that's there. And so I think the same thing is true in the U.S. stock market. Now the question is, has the bubble popped? We did see a 10% decline in the U.S. stock market in about a week. We've recovered most of that decline, not all of it, but that was a violent drop. We have also seen a sharp increase in volatility after a very prolonged period of record low volatility.
Record low volatility was low for so long.
We have massive volatility. And to me, there's a good chance that that is a sign of a change of trend.
Yeah.
And if we have changed trend, then the air is going to come out of this bubble, and it's a long way down. And the only thing that will stop it, and I actually believe that this is going to happen. So I don't believe that all the air is going to come out of this bubble. I believe the Federal Reserve is going to do everything it can to blow it back up. So I don't believe that they're going to stay on their trajectory of rate hikes and quantitative tightening. I think we're going to get another round of quantitative easing. I think the Fed's going to go back to zero. They're not going to normalize. They're not going to shrink their balance sheet. They're going to expand it. And so I think that will put some kind of nominal floor beneath the stock market or maybe the real estate market or other markets that would otherwise implode. But I think that's going to kill the dollar. I think that's going to eventually lead to a currency crisis, and so goes the dollar, so eventually goes the bond market. And if the bond market implodes, then interest rates are going to skyrocket, and the central banks are going to lose control.
Yeah.
And obviously that's an environment where gold is going to shine brightly. It's an environment where a lot of people are hoping that the cryptos will outshine gold. But again, I wouldn't want to make that bet. I mean, I think the cryptocurrencies are just one of the bubbles that is going to pop.
Yeah. Well, yeah, sticking on the topic of markets, I think you're very right. The biggest thing that I'm genuinely concerned about is the after effect, because you were talking about what many people, I think, like Mike Maloney and others in the space who have usually focused in gold markets have been talking about is there's going to be a period of deflation and then hyperinflation, which is going to be the Fed's response in QE 4, 5, 6, 7, whatever, how many times they do quantitative easing. But the thing for me is what you mentioned first is the asset bubble we're in right now. So to kind of explain this for those of you out there who aren't really kind of active in regards to traditional markets, what happened back in 2008 is you obviously had a drastic recession. You have an overinflation in housing prices because of really bad policies and lower interest rates. And then you also had the credit crisis as well. Credit was really cheap. And then you got to a point where the Federal Reserve, for pretty much 8 to 9 years, left interest rates at net zero. This means that, like Peter was saying, there was easy money in the economy. There's pretty much, if you wanted to borrow money, you pretty much got it for free. You just had to pay back the principal eventually, or extremely low interest rates around 1 to 2%. And with a stock market at 50% off, every single corporation, commercial bank, they're sitting there thinking, why don't we just go up ahead instead of making loans out to people and taking risk on consumers and actually investing in the economy, let's just go ahead and prop up an asset bubble. So they just started buying up stocks, they started buying up ETFs, and what happened was you see companies like Apple, for example, which used to be known for the dividend that they pay out to their consumers, now spending more on stock buybacks each quarter instead of giving out dividends to consumers, and they buy back their own stock. Now, what's the issue with this? Well, this means that companies out there, even corporate, top Fortune 500 companies that are publicly trading, are spending trillions of dollars. In fact, I think by 2014 or 2015, we reached $4 trillion since 2008 of stock buybacks, where companies are buying all this cheap credit and they're going out and buying up these equities, whether it be their own stock or another company. And here's the issue with it. Eventually, when the Fed starts to raise rates, and they've already started, I think Schiff, what's the rate? Is it 1.5% or what are we saying?
Yeah, that's the top. It's a range between 1.25% and 1.5%. So the midpoint is what, like 1.35 or around there.
Yeah. So what we're dealing with right now is we're starting to see rates rise, and when you get to a certain point, and you won't see the side effects of it for a good 6 months because it usually takes time to really see the implementation of rate hikes. When rates get to 2 or 3 or 4%, wherever that fall point is, you're going to see the cheap credit dry up because your guaranteed returns in the market, usually the markets have a general annual return that you can calculate. When that interest rate gets up to there and it starts to kind of toss with your risk and reward, then people are going to stop borrowing the cheap credit. It's not cheap anymore. And it's going to get to a point.
The other problem is it's not just interest rates that are going to go up, but the price of everything that's going to go up. I mean, interest is a cost in the economy. And a lot of businesses have to pay higher rates, and they pass those rates on to their customers in terms of higher prices. And prices are already on the rise. We've created a lot of money. That's inflation. And a lot of that inflation initially showed up in asset prices, and everybody was happy about that. But in the end, a lot of that inflation is now going to show up in consumer prices, and nobody is going to be happy about that. And so this is going to really weigh down on the economy as the cost of living really starts to explode. As the cost of financing your debts are going up. And this is not just for American citizens, but for the American government. I mean, we got a $21 trillion national debt that needs to be financed. And as the cost of financing that debt goes up, the burden ultimately falls on American citizens. They're either going to have to pay for those higher rates with increased taxes or diminished government services or more inflation as the Fed monetizes the debt. But these problems are going to snowball. And, Trump is threatening to accelerate the day of reckoning with potentially a trade war. So there's a lot of stuff that's going to happen that's much worse than 2008. And remember, what happened in 2008 was the consequence of what the Fed did to get us out of the recession in 2001. It's always the cure for a prior recession that is the cause of the next one. And the busts are always proportionate to the amount of stimulus used to create the preceding boom. And we used an unprecedented amount of monetary heroin to inflate the bubbles that we have now. And so the bust that we're looking forward to is going to be unprecedented. They were saying that the Great Recession of 08, 09 was the worst one since the Great Depression. I think what we're headed for is going to be the worst one, including the Great Depression.
Well, yeah, because we have much more debt now than ever. But basically, basically outside of the lowering of interest rates, guys, the Fed did what they do best outside of lowering interest rates. They do quantitative easing, and a lot of people have misinterpretations of what quantitative easing was because they think it was just banks, the central bank giving out money to commercial banks and other people who got money from the Fed. What they actually did was purchase toxic assets off their balance sheet. So, for example, they might have had the CDOs, for example, which had all the subprime mortgages or the really risky mortgages that obviously people were defaulting on. And what the Fed did is they gave out capital to the banks. They took off those toxic assets. So picture the Federal Reserve like a big dumping ground of all the bad mistakes of the past, few years of 2000. And now what they pretty much did is said, okay, you're too big to fail. Don't worry, we'll bail you out. Go make the same mistakes. And you can see it right now. The other thing, Peter, I'd like to get your opinion on this because I guess your focus was on the housing market back during the mid-2000s. For me, I still see, outside of the fact that CDOs are mostly irrelevant in the U.S., they're not here anymore. They are making a comeback in, I think, Europe and Asian markets. But the major thing that I still see as a risk is that subprime mortgages under what's known as shadow banking, the banks that are lower, smaller, and less regulated than the commercial banks, have the same amount of market share for subprime mortgages than they did back in 2006. Have you heard about this?
No, I mean, the subprime market it doesn't exist the way it did in the past.
Yeah.
But there's still a lot of people that are buying property with very slim down payments, 3% down. And a lot of these are FHA loans now. So the government is kind of, taken over the subprime industry. So we've kind of nationalized the industry that failed. And so now the government is just doing directly what it subsidized during the housing bubble. But this is another bubble that they have inflated. Housing prices should have been allowed to fall much more than they did. So by propping up the market, the government prevented the market from kind of curing the disease, and so the disease is still there. But it's not just in the housing market. It's in the auto market. It's in credit cards. It's in student loans. It's in the stock market. I mean, anything that is a function of interest rates and credit has been adversely affected by Fed policy. But you have to also realize that the destructive nature that this has to the underlying economy, because by keeping interest rates artificially low, they discourage savings, they discourage capital investment, and they encourage excess debt and consumption. And so that's why we have record trade deficits. It's not because foreign countries aren't playing fair. It's because we're not investing, we're not saving, and we have too much government, we have too much regulation. I mean, the reason that Trump is president is because we so destroyed the economy during the 8 years of Obama that a lot of frustrated Democrats voted Republican because they believed that maybe Trump was going to make America great again. But unfortunately, making America great again is not just a campaign slogan, and nothing Trump has done since being elected is going to make America great again. He is simply perpetuating the policies that are the reason that America is not great. And unfortunately, again, we're headed for this massive economic crisis that is likely to be blamed on Trump, on tax cuts, on deregulation, which is not the reason that we're going to have this crisis. But the solution is going to be to double down or triple down on government. And we're going to have to put the socialists back in charge. And they're just going to take a really bad situation and make it a whole lot worse.
It's funny you mentioned that, because thinking back to the beginning of our conversation, talking back during 2011 after 2008 hit, and a lot of people at the Occupy Wall Street movement were calling for those same things you're talking about, or the opposite of what Trump has implemented. And I thought the exact same thing when I started to see some of the successes that have been under his administration, or at least in my eyes, successes. Don't want to get too far into politics here, but he did have some good things. Deregulation, I think lowering of corporate tax, I've been saying for years to drop it to 15%. And then now I think, even though those are positive changes and they've had positive impacts on the stock market and possibly for small businesses across the country who need that extra money, the issue is going to come in the fact that no matter what you do politically, whether it be through tax policies or healthcare, you've got an impending debt crisis when interest rates start to come up, and people won't be able to pay.
And look, there has been some deregulation, and I would credit the president for the deregulation that has taken place, but we basically barely scratched the surface of what needs to be done. So to think that this economy has now been unshackled from government, I mean, there's still a lot more regulation today than there was 8 years ago. I mean, and we had too much regulation before Obama. And so it's not like we've undone all that. And of course, Bush added a lot of regulation that we needed to get rid of too. But the other point on tax cuts is tax cuts are not a good thing if you don't cut government spending. The problem is the size of government and the burden that government places on society. Now, part of that burden is the taxes that we have to pay. So if we're going to have a big government, then we're going to have high taxes. Now, if we want to lower taxes, which is good for business, we need to shrink government. We need to make government smaller so it doesn't need the taxes in the first place. But if you do what Trump did and the Republicans, is just give out tax cuts, but not only not cut government spending, but actually increase government spending. The Republicans agreed to a budget that increases defense spending and increases welfare spending while cutting the revenues to finance the additional government. So this is the worst thing that you could do, because paying for government with debt is worse for the economy than paying for it with taxation. So the tax cuts are not beneficial, right? That is the problem. And of course, when the economy implodes, because the Republicans promised so much good was going to happen as a result of these tax cuts, and none of these good things are going to happen. Instead, bad things are going to happen. Those bad things are going to be blamed on those tax cuts.
We need to get Ron Paul up in the White House maybe afterwards or something.
Well, we're gonna have to have Bernie Sanders first, or
True, true,
somebody
fair
like
point.
him.
No,
I don't know. I mean, Ron, I think is in good health, but I think he's going to be
he's
pretty
getting
old to
up
try to
there.
run in 2024.
I,
So,
I was surprised. I mean, it's funny because I really kind of taking a look back, Peter, and I genuinely mean this. I grew up watching people like you, watching people like Ron Paul, and I kind of took off a original kind of like a libertarian kind of conservative standpoint on things, free market principles, and it's definitely it's a good to see that we kind of share eye to eye on that, and I think that's what's going to come over the next year or two. It's going to be quite interesting to see how the media spins it just like they did in 2008, how they keep it away from the focus of kind of totalitarianism in the sense of government as well as the financial system. But one thing I want to spend some time talking with you, and this is kind of, I guess, the last topic here that I'm really interested to talk to you about. So I've been spending some time looking at commodities markets as well. And over the past few years, I've traded and dabbled a little bit in them. But you see a lot of people like Mike Maloney in the space who I really follow, Lynette Zhang. These people are big gold bugs in the space on YouTube. And for myself personally, I'm taking a look at the chart, taking the same technical perspective I use charting in other markets, and it's looking like both silver and gold are set for a pretty good year. Now, I understand you're probably a perma bull on gold in the long term, but I'm curious as to where you stand going into 2018 and possibly going into what could be a recession over the next year or two. So really would love to hear what you think on that.
yeah, well, I have been bullish on gold for a long time, and for 10 or 11 years in a row, it just went up, right? And so we didn't really have a pullback until 2011, 2012, and gold fell for a few years, and it really bottomed out in December of 2015. Right? It got down to about 10,000 or 1,050 or something like that after trading around 1,900. So it didn't quite have a 50% pullback, but it was pretty big, and that created a lot of bearishness. And the market has been recovering. I mean, now we're 1320-ish or something like that.
Yeah.
We've had a lot of trouble getting above 1350. But we have been going up in the price of gold, and so I do think that we've formed a bottom. I do not expect the price of gold to make new lows. That doesn't mean it can't. I just think the most likely scenario is that we've seen the lows, and that we're going higher. The only question is, when are we going to break out? There's obviously a lot of selling, and you can look at what's happened recently with the big drop in the stock market, the looming trade war, the weak dollar, and we still haven't seen a breakout in gold. And there can people say, look, if gold couldn't break out now, look, it's not going to break out. And there's probably some truth to that, in that people are selling gold because it's failed to rally. But it's also failing to sell off. I mean, so you have a war between the people who are accumulating gold, because I think they understand its fundamental long-term value, and they understand the monetary crisis that's coming, and the speculators who want to sell gold because they think everything is great. They think the dollar is going to rise, the U.S. economy is in great shape, and they think gold is just going to go down. I mean, they probably feel about gold the way I feel about Bitcoin, right?
Yeah.
So you have those forces, but the question is, who's going to win out? And I believe that the buyers are going to ultimately trump the sellers, and we're going to eventually break to the upside. I can't tell you when that's going to happen. I mean, to me, it should have already happened. So it's already past the point where it should have. But I think at some point we're going to exhaust the sellers, and I think the buying is going to overwhelm. And I do believe that when that happens, gold is going to rise, maybe for a while as if it were a cryptocurrency. I mean, I think that when gold maybe breaks out above 1,400, it could move to 2,000 very, very quickly.
Yeah.
I mean, because I think once there's a breakout, it's not going to give people time to jump on this train. And I think it's going to move up so quickly that you're going to have people afraid of buying it, because they're going to be afraid of buying a top, and that it's going to pull back, and it's going to just, escalate this, this wall of worry. But at some point, I think it's going to go way down. I think it's going to happen too when the dollar really starts to fall. Yeah. Maybe that's when the Fed has to, admit that it's going to cut rates, or it's got to launch QE4, or maybe it's just going to happen before that. I don't know. But my advice to people is, don't wait for the catalyst. Just get in now. Just buy your gold, and don't worry if it goes down a little bit before it goes up, or if you have to wait a while. I mean, I think it's going to be worth the wait. I mean, I think the danger is that you don't buy it. You're waiting for a cheaper price, and it never comes, or So I would get out of dollars now, and accumulate the gold and silver that you want to have. And look, most people, I'm not telling people to put all their wealth in gold and silver anyway. I tell people to put 5-10% in, and so get and obviously if the price goes down, you can buy more. And if you have a job, then take some of your paycheck and put more of it into gold if you're lucky enough to buy it cheaper.
Yeah. No, I agree with you. I think Peter's right in the sense that if you guys believe fundamentally, no matter when it's going to come, there's a lot of people who call when something's
Yeah.
going to happen in this market. They'll say 2015, the year. I remember over years, I've just heard the years of doom when the market's going to crash. No one really knows when it's going to happen. Markets can be generally spotted when they're going to cycle, but the fundamentals, if you're worried of a currency crisis or if you're worried of some instability in US or global markets due to monetary policy or some other catalyst, it's good to get into things usually early on. Now, of course, I can't tell you all what to buy and everything personally,
Yeah.
but I will tell you, like Peter, from what I've seen in a technical sense, is that gold and silver right now, for example, gold is going through an ascending wedge right now on the monthly chart, which is really nice. That's looking like it's going to have a breakout. And silver right now is wedging after having an initial run up from its lows at 13. So
Yeah, and
yeah.
look, I think they're very cheap, and I do think in a
Mm-hmm.
way the cryptocurrency mania has stolen some of gold's thunder, and that may be one of the reasons that maybe some of the institutional money that maybe is going into the cryptos might have otherwise gone into gold. It's hard to say, what percentage of gold demand might be being siphoned off. I don't think it's a lot, but I think psychologically it might be damaging potential new demand where people are saying, well, why gold? Well, I'll just buy, people just buy
Well,
digital gold.
it's interesting you
So
mentioned the kind of like sorry to budge in there, but no, it's interesting you mentioned that because supposedly Mike Maloney, for example, was covering a video on his channel where there was someone who submitted a piece of work. It was showing the charting and the volume and the positions from I think one of the branches that was originally it was the commodities trading division under Lehman Brothers or one of the original investment banks, and it was acquired by J.P. Morgan or Goldman Sachs. And they spotted the silver manipulation in markets, keeping the price down, being able to go long and short on it whenever it was most convenient. And they haven't had a losing trade since 2008. It's ridiculous. So,
yeah, and now they've got futures contracts on Bitcoin too.
mm-hmm.
And ironically, in the early days when people were defending Bitcoin and telling me why they preferred it to gold, they would tell me, well, gold is manipulated because it has a futures contract. So I want to buy Bitcoin because it doesn't have a futures contract. And now you hear the same people saying, oh, buy Bitcoin because now it has a futures contract. It's legitimized. It's more mainstream. So you can't have it both ways. Either the futures contract is good for it or bad for it. You can't. That's the mark of a bubble. When no matter what the news is, you're going to say that is good. But if you talk about gold being cheap, and I think it is, and very few people own it, in the mainstream. What's even cheaper than gold are the gold mining stocks. See, that's where I think that if people really want to make some money, and obviously it's not going to be like somebody who bought Bitcoin at $2 and sold it at 20,000. I mean, those type of returns are really once in a lifetime type of things that you're probably not going to get in on. But I do think there are a lot of gold stocks that will go up 10, 20 fold. Maybe some of them will go up 50 fold from where they are now. And so that's, if you really want to speculate and you really believe in the price of gold, then gold stocks are going to give you a lot of bang for your buck. I manage a gold fund, Europe Pacific Gold Fund. People can check it out, or people can talk to my employees at my brokerage firm at Europe Pacific Capital about looking into the mining sector as a speculative way, right? Gold is very conservative investment, in my opinion. Gold mining stocks are obviously quite speculative, but obviously some speculations can work out, right? I mean, just because it's speculative doesn't mean you're going to lose your money. You could make your money if you're betting right. And I think this is a very smart bet. As long as you have money to lose, I think it's going to be a winning bet. And of course, there's other things that I help people do. Remember I say you're putting a certain percentage of your money in gold. I'm helping my clients really get out of harm's way by getting into investments in Switzerland or Singapore or Hong Kong or Norway or New Zealand or Australia. Or these are not perfect places by any stretch of the imagination, but I do believe that they're going to be ports in a storm. Even some countries I like in South America or Southeast Asia that I think are going to come out of this crisis richer than when they went in. Because I do think a currency crisis ultimately is going to be about a realignment of purchasing power and relative standards of living and relative wealth. And so I think Americans in particular are going to end up much poorer, right? We're going to have to live within our diminished means. We're not going to be able to buy so much stuff on credit anymore. So I think you're going to see U.S. assets losing value relative to assets in other countries. And I think the countries that are going to be the winners are going to be countries who have been producing more, saving more, exporting more,
innovating,
whose citizens are going to be rewarded for their frugality. And countries that don't rely on government, where people save for their own retirement. They don't depend on a government Ponzi scheme.
Yeah.
And so, I want my clients to be on the right side of this, of this event. And this is a major, transition that is, historic in nature. And
Yeah.
there's going to be people who lose a lot, and there's going to be people who gain a lot.
Yeah.
And to me, I want to be, on the losing side, on the winning side rather, of that, transition. And people can do that if they just have their investments the right way.
Yeah. No, I think, you're mentioning earlier that 2008 was kind of like, some people say that was the worst kind of recession we're going to see for a long time, or what people would refer to as the longer term credit cycle. Yeah, I think what we did is we halted it. And with that, with the Fed continuing to do the same exact mistakes over and over again, I think the analogy you used in the first documentary I saw you in was overdose. You said it's like giving alcohol to a drunk. It's like, he's going to have a bigger hangover in the morning, if you just keep on repeating that same kind of Fed alcohol where they just keep money
Yeah,
low.
look, 2008 was, the overture. I mean,
Yeah.
it was, the beginning of this opera. The fat lady is not even in the theater yet. I mean, so yeah, and if the Federal Reserve, if the government had not acted the way it did with all the bailouts, right, and the TARPs and all that stuff, the downturn would have been much steeper, no question about it.
Yeah.
There would have been more pain, but it would have been constructive pain because it would have ultimately led to a healthy economy that could really grow, right? And we would be out of it by now. I mean, we would be, have dug our way out of the hole. But yes, it would have been, in the short run, a lot more money would have been lost, and we would have had to do the right thing. We would have had no choice but to do the right thing, which would have borne fruit. And maybe it would have resulted in real shrinking of government, in cuts to government spending and reforming entitlement, things that we have still, avoiding doing. But because the government did this, we simply enabled all of the problems that resulted in the financial crisis to get much worse. So instead of allowing the market to cure the disease, we're now much sicker. Like the cancer has now spread, to more organs in our body. So we're sicker than ever.
Yeah.
And now, of course, doing the right thing is going to be much more painful than had we done the right thing back then, which means it's even less likely that we're going to do it. But ultimately, what it means is that this cancer is going to kill us.
Yeah.
And by death, I mean runaway inflation or hyperinflation that destroys the value of the dollar. And of course, that is much worse than any financial crisis could ever be.
That's the thing. This time it's a little bit different, everyone, because what we have to realize is comparative to 2008, where the Fed had its two key weapons that it could still use of lowering interest rates, of printing money, it is going to lose its ability to lower rates unless it wants to go to negative rates. And then outside of that, you've got potential QE4, quantitative easing 4, or fourth round of it. But the issue is it's going to get to a point where you need such severity in the printing of money and the emptying of these toxic assets that it's going to get to a point where you have hyperinflation, hyperintroduction.
Yeah, I see. I think, again, it's like a drug addict. I mean, at some point, if you have this tolerance and you need more and more drugs to get high, there's going to be a point where you
just
take
crash.
so much that you. And I think the next round of quantitative easing is not going to be this big boom in the stock market and the real estate. I think it's just going to be prices going up. It's going to be consumer prices.
Yep.
It's going to be the Fed
Real
prints a bunch
hyperinflation.
of money and your grocery bill goes up. It's not your stock market statement from your broker that's going up. It's your cost of living that's going to go up. And so this is the end of it. I mean, this is something that, I've been talking about or warning about for years. And I think, we're finally going to experience it. I think it's taken a lot longer than I would have guessed when I first started warning about it a long time before the housing bubble burst. I was warning about this stuff, in the late 90s, and then much more so in the early 2000s when I saw how Greenspan reacted to the bursting of the dot-com bubble and, the September 11th tragedy. So this thing has been a long time in the making. And but I think we're in the ninth inning of that. Whether we go into extra innings or not, I mean, there's no way to know. But I mean, we're close to the end.
Well, it's understandable because for years we had, I guess, kind of the outcries of Wall Street to Grandpa Bernanke and Mama Yellen and stuff to keep interest rates low, to keep things, every time there'd be a talk about interest rates, there was a dip in the market, or we might consider raising rates 0.5%. And it shows how fragile things are in a fundamental sense. But again, Peter, I want to say, I guess I kind of looked at the time. We've been talking for over an hour here, but yeah, no, sorry. Well, no, it's been a pleasure. I just want to say I really appreciate that you were open to talking about some different topics as well, and kind of going on more of a macro level on things. And I know we have probably some disagreements on Bitcoin and gold and stuff, but what I love is that we both come from that speculative community of traditional finance, and at the same time, I think I can see added value in gold and not only Bitcoin as well. But I got to ask you, Peter, can I please get my first bit of gold here? I haven't actually bought any precious metals, so can you hook me up?
You don't own any gold?
I know someone gave me on my trip. I have it here in my wallet. I can get it out. Someone gave me in Australia a little, I think an ounce of silver, and it's a collectible
coin.
Well,
you see the logo above my shoulder. You can call Schiff Gold, and you can get some more. The phone number is on the website. But also, take some of your Bitcoins, which I know that you own, and go open up a gold money account and take some Bitcoins and buy some gold. That way you kill two birds with one stone. You get out of Bitcoin and you get into gold.
Hey, as long as you accept Bitcoin, yeah. I'll take it. Yeah, you guys are. Well, again, Peter, it's been, again, on a fundamental sense, an absolute pleasure to talk to you. Thank you for coming on and spending some time. And hopefully we can do some more videos in the future and talk more.
Yeah, well, yeah, my pleasure. Good luck with your channel as well and everything that you're doing.
Thank you, guys. Well, anyways, guys, that's it for the video. If you guys, again, want to check out anything in regard to Peter Schiff, I'll leave a link to his channel down below, and SCHIFFGOLD and Gold Money and a lot of the resources you might need for looking over the stuff we talked about. But yeah, again, keep up with the debate, guys. Keep talking about it. It's a really interesting topic. And again, expand your mind into knowledge of traditional financial markets as well. It's very important to understand the fundamentals of that in crypto or gold and other precious metals. So anyways, guys, that's it for the video. Thank you guys so much for watching, and I'll see you all in the next one. Stay tuned.